Welcome to another S&P 500 analysis. This is the midweek edition. Did we just receive a signal to retreat? Was it the near-term top for this rally? In this video, we'll review the price action of the S&P 500 and some interesting price action from some of those mega cap tech stocks, and a signal that might be telling us this is it. The fat lady has sung. Stay tuned. Today is the last day of the month. So let's take a look at how the index did for the month of May. The S&P 500 finished the month with an outside month spinning top candle. The high is 4231.1 and the low for the month is 48.28. Now from this watch list, we see the S&P 500 only gained about 0.25% for the month of May, and it closed the month at 4179.83. Still unable to clear above the 4200 level. The Nasdaq 100 is the top performer with 7.61% gain, while the Russell 2000, Dow Jones Transportation, Dow Jones Industrial, and also the New York Stock Exchange Composite all are negative for the month. And the year to date, the Nasdaq 100 holding on to a 30% gain, while the S&P 500 gained 8.86%. The Russell 2000, Dow Jones Industrial, and the New York Stock Exchange Composite are all down for the year so far. And by the way, if you are interested in getting these custom quote column for your Thinkorswim platform, then go watch this video that I have put out on how to get this script for the Thinkorswim platform and how to install them. I have the link in the description below. Now looking at this intraday chart here, you can see that the first two trading sessions that show us the tone of the market is negative, and we see the internals are negative. Notice the 52-week high versus 52-week low, with the 52-week low continue to outpace 52-week high, and the up-down volume ratio is also favoring the down volume. The VIX is still under 20, and the market participants are still showing no fears. We notice the put-call ratio is also moving back inside of this hedge zone between 0.75 and 1. And it is moving closer to the risk-off zone when it gets above 1. And the daily advanced decline also showing that the declining issue outnumber the advancing issues. We see the negative divergence between the New York Stock Exchange cumulative AD line and the S&P 500 is still unresolved. Likewise, the negative divergence between the cumulative AD line in the Nasdaq market versus the Nasdaq 100 still remain unresolved. Now let's take a look at the index ETF. Looking at the diamond, the Dow Jones Industrial ETF, you see that it booked a trend line right now. So if it is unable to reclaim this trend line, we'll be watching for the price to come down to this lower range of the expected move. And the spider, the ETF for the S&P 500, notice that it came up and filled this gap. Remember we said on the previous video that if it is unable to hold above this gap, then we'd be looking for the price to come down and possibly tag this lower range of the expected move. So right now you see today the price is coming down and it is checking at this low zone here, this resistance turn support area. But we are looking for the possibility of coming down to this lower range of the expected move. And looking at the QQQ, the ETF for the Nasdaq 100, notice it went above this 618 retracement and then dropped back. And now it is below this gap here. So remember we said that unable to hold the gap and unable to stay above the 618, then the lower range of the expected move could be in place. So right now we're basically watching for the price to see would it be able to get back above the 618. And if it is unable to get back above the 618, then we'd be watching for it to come down to this lower range of the expected move. In the IWM, the ETF for the Russell 2000, we saw that it came up and filled the gap, and right now it is unable to hold above the gap. So again, we are looking for the price to come down to the lower range of the expected move. Today, it almost came down to tag the lower range. So continue to watch for the price in the coming day to see if it could come down and tag this lower range of the expected move. Now let's take a look at the price actions of the mega cap FAANG stock, and starting with NVDA. Notice NVDA came up to the upper range of the expected move, which is between 408.80 and 418.80, and also put in a new all-time high at 419.38. Now, this is a clean all-time high. What I mean by that is the all-time high is made in the RTH session, the regular trading hour session. So it is clean, and it will go down into the record book as an all-time high. And today it came down and filled the gap from yesterday, and it is down 22.77 points today, or 5.68%. So we're going to watch for the continuation of a pullback from NVDA and look for a continuation down to this expected move, this lower range, expected move between 367.50 and 370.10. Now, this is a non-FAANG stock, and they've basically been riding along with NVIDIA. This is AMD. AMD came up short to this pivot high at 132.96 and the upper range of this weekly expected move, which is between 133.70 and 137.50. Now, it did tag the lower range of the expected move today, which is between 119.67 and 120.40. So watch for a possible move back into this price channel here in the coming days. And looking at Tesla finally made it back above 200 level, and it tagged the upper range today and also yesterday as well. And the upper range expected move is between 203.60 and 208.30. Now watch this trend line for potential resistance here, and also in confluence with this 50% retracement. And if it encounter resistance and unable to break through the trend line or the upper range of this expected move, then expect price to work itself down toward this 38% Fibonacci retracement level, which is also in confluence with the lower range of the weekly expected move, which is between 181 and 182.70. Now let's take a look at the mother of the mega cap stock, Apple. Today, it was only a little bit more than 2 points away from its all-time high, and it's been trying to move above this upper range of the weekly expected move, which is between 178.10 and 179.20. And it got rejected both times and closed below this expected move, this upper range expected move. And notice today it finished with a shooting star type of doji candle, and so was yesterday. But the only difference is today, it went from green to red, so that is very bearish. And I'm going to tell you a little bit about what I think it might be telling us. And if we look at this intraday chart, this is a 3-minute chart here, so each candle represents 3 minutes. And you can see that it was positive throughout the day, except near the close here, because at the close, it actually went negative. Now notice this low here. This low is 177.42. And it is the same as the last print. So this could be just a delayed posting of some transaction that was made down here. So we never know. But in any case, you can see that in the last few minutes near the close, it dropped 2.5 points in 6 minutes. So something is going on here that prompted Apple to just sold off like that. So if this shooting star candle is legit, then this could be telling us that Apple might have put in a top for this move here. This is a 45% move from the bottom to the top here today. So as the saying goes, if Apple goes, so go the S&P 500 and the NASDAQ 100, because Apple is one of the mega cap stocks that have been pushing the S&P 500 and the NASDAQ 100 up. So you believe this right here is the top for the S&P 500 for this move? Let me know in the comment section below. And do you see this Apple will be able to make another new all-time high, or it have made a top today? So be sure to smash the thumbs up if you find the content informative and useful, and also post a comment to help promote this video. And if you are new to this channel and like to continue to watch these content from me, then click the subscribe to this channel. Thank you for watching and stay safe.